Morning, Scott. I'm just getting ready. What can't you buy? You just have to enact after hours purchases. You can buy it. Where the fuck is this damn player? I'm watching CNBC. Okay, why is mother effer? I don't know why this happened. I don't know where the damn window went. Oh, I guess I can't play it. Playing picture-in-picture? What the hell? Rigetti computer is moving? Larry, I did see GCT. I just wrote the note, Larry. GCT is moving. I should just bring this over. I mean, I've got CNBC on here, but I'm going to mute it. Let me just mute it. I was just writing my note on GCT. It's funny because I was looking at, which one is it? It is WRD, We Ride. This one has been getting crazy. And over the last couple of days here, this is the 1 hour stock battle strategy that I have in Trendspider. And that's been doing crazy good. Now, I know I effed up. Let's see. We're going to move this over here. Because, oh, I don't want that. No. We're going to get out of this. How the hell do I get out of this now? Oh. Okay, I screwed this up. Hold on. Oh, I screwed this up. We're going to move that there. And then we're going to move this to a appropriate way. There we go. That looks good right there. And then we'll move. Oh, what happened? Oh, I guess that moves over that way. Huh. Okay, there we go. Now I got to shrink it a little bit to show that side. There we go. Okay. And we're going to show that there. Oh, good morning, Wendy. You know what? I'm going to put CNBC over here on my iPad. I'm going to ignore comments for a little while because I do want to see the CPI. That's what I want to see. Live stream. And why don't I get this? Okay. Do. I can do live stream over here. Oh. Wow. Oh. I guess I signed in the wrong place and live stream. Okay, come on. Do I have to go to I guess I've got to go to, hold on, I got to go to DirecTV. Do I have DirecTV on here? I do. So now I got to go to CNBC. There we go. And we'll watch now. There we go. Okay, consumer price index. Market's flying. Market's up. 0.2 versus 0.2. So, but this is We Ride. So I was looking at that. That one's turning around. And then you look at GCT, and I mean, this one, just crazy how it's gone from 11 to 15. So, and in pre-market, this one's up, let's see, 11% to 17. So, on the 4-hour, let's see, does it work? It does work. I mean, it got you in at 13. Let me check the Liberation Day strategy, though. This is what's funny. So, let's see. Daily stock pick. I just did. Which one is this? Let me see. Oh, what am I looking at? Because I know. Oh. 52 week. Oh, let's see. No. Daily stock pick 52 by Trendspider. Yes. Okay. So I think, let me see. Let me go to Market Scanner and then daily stock pick 52 week. No. Okay, so it's only up here. Oh. I guess it's only up here. So yeah, they did that. Interesting. I had, boy, that's a lot. As the NASDAQ composite, though. I had them do a pick 52 week scan. Let me see. Cancel. That's recently viewed. Daily stock pick 52 week. I'm going to favorite it. Okay. And we're going to take that out. There we go. I had them create this one, but I don't think I can share it. They shared it with me, but NBIS is, I mean, that's just, to me, I like it even more. The only question is when to buy. And I should have bought at 21 because it's at 33 right now. Let's see, in pre-market, it's at 33. It's up 1.14%. The 4-hour algorithm is 50-50. So it's 50% win, 50% blah. But there's so much to go over. And I've got to close that, got to close that. Trendspider and I met yesterday to go over things, and I've got to sign out here just to make sure this is all set. There we go, Seeking Alpha Premium. Then we've got Alpha Picks, and I'm going to open up the bundle. And Trendspider, we've got 32% off. There's that one. And by the way, I think, did I include it? Yes. So, okay, let me open up my, that is my first millions value investor. I didn't get to that yesterday. And let me sign in. I was on yelling at Scott Redler yesterday. CPI less than expected in April. That is good news. April, good news. Expect a Fed cut in June. Okay. That's what that basically means. So we will get out of there. That's all great. Medicare to publish drugs, NASDAQ 100 futures rise after CPI rises less than expected. There we'll just do this one. I'm gonna do that story instead of the other. The other one's okay, but I think that we'll just do that. We'll close that. And boy, wait. So I'm gonna bring up a lot. Okay. Value investing. We're gonna get out of there. Value Investor Club. I need to go over that one. I do have a login for that. Okay. We've got everything. So I've got a ton to share with you. I've got a ton to share. Trading desk. I'm going to go over a social request. I usually don't go over, part of the reason I don't go over social requests a lot anymore is because, let me just get this to AI tracking. It's because, why do I look all washed out? I don't know why. It would take the whole show. So but John asked a question yesterday. I'll bring that one up. I will address United Healthcare. I made a mistake adding it back to the core portfolio. GCT we'll talk about. I added that one. iBit and Bitcoin. They're basically telling you that supply and demand are out of balance. And so I think iBit is a great buy. This one, strong buy. Now, let's see, Eli Lilly. Eli Lilly is in the crosshairs, and I got to get rid of this damn. Okay, hold on. We're going to get rid of DirecTV, and we're going to go back to YouTube. I'm used to looking at myself over here so I can see my screen. I do want to see how the screen looks for you guys before I start. Now, why is it black? Hold on. Oh, there I am. Okay, now it's up and running. By the way, hit the thumbs up button. There's 22 people in here, 14 thumbs up. It might all be bots. The screen looks okay. Okay. Eli Lilly is in the crosshairs of the administration. I mean, Eli Lilly rebounded yesterday. Crazy. We'll look at that chart. Amazon was one of the biggest winners. I don't think it's done. I mean, I just don't think it's done. A big one as Trump is in UAE today. It's freaking NVIDIA. I mean, I think this one's it was up 5% yesterday. And you have this. I mean, you have Elon Musk, Crown Prince, MBS, and Trump. So I don't think Tesla's done. Tesla's up 6% yesterday. It's up 1% now. And it joined the $1 trillion club. So we'll go over that one. Palantir continues to run. The valuation makes no sense to me, but people keep upgrading it. Uber hit an all-time high. I can't argue. This is Hamid, who is the CEO of Earnings Hub and Savvy Trader, and he goes over why he sold it. I mean, he just basically puts it out there for you. He's a great investor, a fantastic investor. Coinbase is going to join the S&P 500. That one just popped, and it's popping even more this morning with an upgrade. Marjorie Taylor Greene, she invested in Restoration Hardware. I kind of pointed out here yesterday, I think there's a gap fill that's available for you. I actually had Trendspider work on a Ross Cameron Warrior Trading scanner. And so we're going to log in and import that one. I will show you that as we log in and import that one. And let's see, why is that opening up? Oh, did I guess I copied and pasted. Okay, we're going to take that out. McDonald's. I was going to include a story about this. I just think it's a side note. Nobody's going to read the story, but McDonald's is hiring 350,000 people this summer. Just so you know. It's crazy. Since you're in a buy the dip market, I mean, this is enough. Mic drop. I mean, we're in a buy the dip market. So Goldman Sachs is upping their S&P estimates. I agree with Ryan here. Momentum is strong. I think you get back to all-time highs. I asked the Spaces crew yesterday, and different than 2 weeks ago. Again, this is how peer pressure hits you. Everybody agreed. We're not getting back to all-time highs like 2 weeks ago. I said, I'm going to Leroy Jenkins this. We are. And now everybody's like, you can't listen to those people who kind of told you. But we knew the bottom was in. You know how? Jim Cramer's Black Monday prediction was the exact mark bottom. I mean, you can't make that up. I will tell you, I logged into Fidelity to see the biggest gainers in my account were alpha picks yesterday. I also have another kind of embarrassing thing to tell you about, and then the CPI. I don't want that one. I want this. I don't want that one. Hold on. We're going to take this one out. And we're going to, again, we're going to go home. And it's because NASDAQ 100 futures, that's the one I want. And we're going to put that up there. Okay, let's see. Quit. And that's the one we want. What time do I start? I usually start around 8:30, between 8 and 8:30. I would have been on at 7:30 this morning, but we got a lot. So, by the way, if anybody wants this Trendspider, since you guys try it, I haven't gone into this. There's the momentum trade, the scanner from Trendspider. But let me put you on a quick countdown. I just got to go. I've drank like 7 glasses of water this morning to try and rehydrate myself. So let me just put you on a soothing music, and I'll literally be right back.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me
Okay, I'm back. I'm just setting up the camera.
Tune in.
And scene. And scene. Oh, good morning, everybody, by the way. If I didn't say good morning to you. Okay. I got to put on my do not disturb. Because I know somebody's going to call me. Okay. So let's go to Liberation Day strategy. I have not gotten alert on QQQ. I am going to go to the core investments, and then we're going to go to QQQ. It still hasn't gotten you in. That's interesting. Because that blue line, yeah. Huh. Interesting. Maybe today's candle? Huh. I don't know. I mean, it just price close greater than two candles ago. Huh. Don't know when it's going to get you back in, but let's test. Huh. Okay. I'm there for it. I mean, you know, the 4-hour algorithm, which I think does really well. So, Amber, yeah, I did write it on a weekly chart, Chris. The Liberation Day strategy, it's a moving, I mean, you know, perfectly honest with you, it's a 15-day SMA on the entry. And I think I don't have a 15-day SMA on my chart, but you know, the blue, this is what's interesting to me, is the blue is a 21-day. No, I'm sorry, the yellow is a 21, and it's trading above that. The blue is the 50, and it's trading above that. So I think it should close above it. But I think it's waiting, you know, it does say 2 candles ago. So I think it's waiting for 2 candles to close above that. So yeah, I think it's right. Yeah. And it's 2 candles ago. So it closes 2 candles ago. So maybe not this week, but probably next week it will get you in. Which again, it's not meant to time it. It's meant to say, hey, when you're perfectly on par, and that's the difference between, you know, and Chris knows this, when you go to a weekly candle, patience is a virtue. You have to be patient. That's why we didn't go with a daily when we wrote the 4-hour algorithm, because it was too slow. We wanted 4 hours. You know, I even wrote a stock battle 1-hour strategy. 1-hour strategy on this one, which, you know, got you in at 502 on QQQ. But you choose which one fits your lifestyle, and that's the key. But the Liberation Day strategy, I think that's why, because 2 candles ago, again, when you back test it, it works. But it's interesting. It's definitely interesting. So, Amber, on. Everybody loves them. I may try them again. The problem wasn't the toe box. It was, so when I run, my feet typically swell, and I don't like closed shoes. I like a lot of root movement. That's why I like the dad shoe of New Balance. Listen, it's all fat people in New Balance. If you're a dad and you're out mowing your lawn in New Balance, it's because you're fat. I mean, I don't see in shape people wearing New Balance. But yeah, it's just a matter of preference. I tried their wide shoes. I think it's 2E, but I wear the 4E on wide. Now, in Under Armour, I have started to actually, I would tell you, Emir, if you can get closeout Under Armour shoes, running shoes, I got running shoes from Under Armour that are, so I normally wear a 10 wide, but I got 10.5 shoes on closeout. They are closed in a little bit, but it gives me enough room back and forth to kind of run in it. And what's interesting about those shoes, they are so much lighter than any other running shoe I've had from Under Armour. I mean, Under Armour just is the lightest shoe that I've ever felt on my foot. And they do have wide options. So I do have a wide Under Armour. And I got 2 pairs for like $40 at the outlet. And they're great shoes. They are great, great shoes. And I'm not one of those runners who's going to say, you know, you've got to run in the same shoes. I'm not running for time. I'm not running for, you know, anything other than just fun. So I'm going to check my Webull account. My Webull account was actually down yesterday, believe it or not. I'm at 11,481. But everything's green today. See the right-hand side there? It's all green. So it's literally just Apple, Google. I think everybody should have a Webull account. Even if you've got a large account, why the hell did it go up there? What are you doing? What's it doing? The camera. I had a meeting with Trendspider yesterday, and we're going to do a collaboration. Me and the new Jason, Mike, but we're not sure. Yeah, I like Under Armour shoes. I like them. I've been a fan of them. But I will tell you, On is definitely the number one most talked about shoe. And so, Amber, from a investing perspective, I can't argue it. I mean, you know, let's just look. So let's look at the hype, because the valuation, they are trading at 42 times forward earnings. Whereas Under Armour isn't even making money. Its valuation is a bit stretched, to say the least. We can look at the financials. Earnings, let's see. Yeah, they're not making money. Revenue annual, $1.4 billion. So, what's On's annual revenue? 682 million. So On's doing really great. I mean, again, it's expensive. It's expensive, but you keep that growth up and it's not that expensive. $59 is what Wall Street says that they're going to pay for it. But it is expensive. I mean, you know, again, 42 times forward earnings, but you add in the growth at 0.32 PEG ratio, because they're growing at 29% revenue year over year. Under Armour, I don't think they're growing. They're losing 7% revenue year over year. So it's just it's a worse off company. But Merrell makes really good hiking shoes. I actually wear what is it? I always wanted to say Solomon. I wear trail runners. So even in the snow last week, I was wearing trail runners with some lining. I just put lining under my socks so that my feet don't get wet. Let's see. I'm going to get started now because we're already late and I supposedly have a meeting at 10 o'clock. So good morning. It is Tuesday, May 13th. The day after another great day in the market, another gap up. Maybe the gap gets filled, but we've got good CPI numbers. We're going to go over CPI. I actually did a retirement analysis yesterday, so I will tell you exactly what Fidelity says I will retire with. It is unrealistic, but I will tell you the actual dollar amount. Are we going back to all-time highs? I think so. I'll make the pitch. AlphaPix had a sell yesterday of a software stock. We'll talk about that one because it made them 37% since June of 2023. It's not the best, but AlphaPix again outbeats the S&P. I'll point out a stock that I found of top stocks, which actually killed it. And some members actually paid for their annual Seeking Alpha premium subscription with it. I worked with Trendspider yesterday to do a scanner, a Ross Cameron scanner. So we'll import that one. I'll provide that one to you guys for free. Coinbase, Uber, a ton of individual stocks, including NVIDIA, Amazon, Tesla, the whole thing, weight loss drugs. We'll talk about UNH, what a shit show that one is, and a couple of podcast favorites. But QQQ, again, we are above the 200-day. If you go to the daily, we've broken above the 200-day. And so that now puts you probably back into this range and to all-time highs. Why? Well, we got a little bit of a bump today because CPI, which is the Fed's favorite inflation rating or metric, came in less than expected. Again, inflation isn't going up. So while Powell says, hey, inflation's going to go up because of tariffs, it's actually not happening. What does that mean? That means we are on pace to see a June rate reduction, which more than likely will push the markets higher. And if that pushes the markets higher, again, QQQ, we are in a bullish trend upward. The 50-day with this death cross right here on April 11th, where everybody's saying, hey, you know, we're in for a hell of a year. It might not last that long. I mean, honestly, it might not last that long. The last time we saw a death cross, we pointed this one out, was way back here in February 2022, and it didn't cross back up until March of 2023. That was a different market. This was man-made. And now we've got some metrics, and we're heading into the great big bill, and we are heading into deregulation, and we're heading into lower inflation potentially. All good news. Just be aware that there is the chance, and it's a big chance, that you're going to start seeing some empty store shelves, because you can't just flick a switch and all of a sudden the supply chain gets back on. So I expect bumpiness. I expect some positive talk from the administration, but pen hasn't been to paper. But the good news is, again, they made a joint statement yesterday with China. All of a sudden, and I pointed this out last night, all of a sudden you're not hearing that TikTok is a threat to national security anymore. You're hearing, hey, we're getting it done with China. So, again, NASDAQ 100 futures, S&P rise. Now, I logged into my Fidelity account yesterday, and I noticed that the biggest movers in my Fidelity account were Alpha Picks, Carnival, and Synchrony Financial. We'll talk about the Alpha Picks in a little bit, but I do want to bring up that I did a retirement analysis yesterday. Okay, Fidelity has what's called a Monte Carlo situation. Any brokerage firm should be able to do this. Okay, I know Charles Schwab has it. I know others have it. I don't know if Robinhood has it. I don't know if Webull has it. But it's a very standard retirement analysis. You should do this. I have it listed for me dying at the age of 90 years. Okay, 90 years old. I actually set this up when I retired to determine, do I have enough money to live on? And yes, I'm wealthy. But it told me that I will die with $43 million in the bank at 90 years old. I don't think that's realistic, but hey, it's definitely like encouraging to me that I will die with $43 million in the bank. It tells me that I may need to spend more and I may need to do more fun things. But if you haven't run one of these retirement analysis, do it. Take an hour this weekend and do a retirement analysis. So if you're wondering, should I actually invest? Has the market bottomed? Well, we knew the market bottomed. What day was it? It was the day when Jim Cramer went on his rant about Black Monday. And it was the exact day. You can't make this up. He's the single greatest indicator known to mankind. He's telling you, Cramer helping you navigate the market. Kramer warns of potential Black Monday stock market crash. I mean, you just can't make this up. It was literally the bottom of the market. Now, where are we going? Only 3 times in history has the S&P been down at least 15%, because we were down 15% year to date and moved back to positive by the end of the year. Ryan says, call me crazy, but this may be number 4. I agree. I agree with Ryan. Momentum is strong. We talk about the 5 factors of the quant. Momentum is strong. You're going into a second half of the year with the one big bill. You're going into the second half of the year with deregulation. I think you're going back to all-time highs. It's not that far off. If you look at SPY, what are we, like 3%, 5% off the all-time highs right there? Again, it's not that far off, and it's not that crazy to think that we go back to all-time highs. And you're seeing Goldman Sachs cuts U.S. recession odds and ups the S&P target. Revised its 2025 real U.S. GDP growth forecast to 1%. Okay, where's the target? Let me see. Where's the target on this one? In addition, the brokers boosted its S&P targets returning in earnings, forecast lower tariff rates. Okay, Goldman Sachs 6-month return for corresponding with year-end 4% to 6,100. Previously at 5,900. So where are you today? Well, SPY, just take off the last 0. You're at 583. 583. If we go to 6,000, that's a pretty damn good move on an index. So Goldman Sachs is moving the needle up. And since you're in a buy the dip market, let's point out some of the big winners. Palantir, since its April low, is up 53%. Tesla's up 43%. Dell 42%. I took that one out of the core portfolio. But it's up 42 freaking percent. Broadcom, I sold. It's up 41%. AMD up 38%. I make as many mistakes as any investor. Okay? Shopify's up. Uber is up 35%. CrowdStrike's up 32%. I trimmed that one. But that one I've made at least 25% on the most recent buy. Nvidia up 27%. Netflix up 27%. Yes, I trimmed that one. Airbnb announced today they're changing the game, and they're up 27%. Microsoft, one of my top 5 holdings, is up 26%. Yes, I trimmed it about 438 or so. It could hit 500. Meta up 25%. I did a huge buy in April on this one. I am way up on that buy. Reddit up 24%, Amazon up 22%, Apple up 22%. I sold Apple, not at the low, but I sold at 200. It's about 210 right now. Spotify up 20%. I bought a bunch more Spotify. So it's a buy the dip market. Okay? The other thing that I want to bring up, I don't have a news story on this one, but it's on Seeking Alpha, and it was in the news yesterday. McDonald's said they would hire over 350,000 people over the summer. Where the hell is McDonald's hiring 350,000 people? I don't get it. They have the automated kind of ordering stuff. How many fries are fat people ordering? I don't get it. You got GLP-1, which isn't boosting McDonald's sales, because we all know GLP-1 doesn't necessarily make you stop eating. But it creates those bad decisions. Nobody walks into Arby's and says, this is a good decision. I want this. They're basically responding to, I need nourishment. I'm going to buy some fast food that's going to make me feel good. That's it. But McDonald's, 350,000 people, I don't know where they're actually getting employed. Now, Alpha Picks yesterday. We can talk about Alpha Picks, because Alpha Picks yesterday, this is a portfolio that is beating the S&P. And they said, hey, we're going to sell. Remember, this is a rules-based portfolio. It had a quant rating. The stock, it's a software stock. They bought in June 15th, 2023. It had a hold rating in the quant for 180 days. Now, I won't put it in the newsletter, but I will show you on the screen exactly which stock it is. And you can see the quant ratings a hold. And so part of Alpha Picks is when it's a hold for a long time, it means the momentum may be gone. And you can see the momentum is gone. So it's a software company with an elevated valuation, okay, suggesting it's no longer GARP. And what is GARP? Growth at a reasonable price, which is what AlphaPix focuses on. So this one made quite a bit of money. It's up 37% over 2 years. There are way more stocks that made more than 37%, but they're not winning it all the time. Since its inception, the AlphaPix portfolio total return has delivered 146% versus the S&P at 49%. That's it. I mean, that's all you need to know. With 7 of the 37 AlphaPix returning more than 100%. They're not hitting it out of the park all the time. Okay? And then I got a message as I got off the air yesterday that I went to Top Stocks last week and I pointed out HRTG as it was a top stock last week, and it's the top stock this week. And this is how we found PSIG or PSIX and FYI. This one, a few audience members bought it last week when I brought it up. So let's look at the 5-day. It's up 17% since I brought it up. 1 month, it's up 49%. Yesterday, it was down 3%. Boy, you got that back in today's pre-market trading. Okay? They paid for their yearly subscription with just that trade, several subscribers. And this one, let's just go over a little because it does have a strong buy in the quant. Why? Well, look at the valuation. Okay? It's 8 times forward earnings. What's the sector? 10 times forward earnings. What's the PEG ratio? 0.19. Why? Because it's growing revenue year over year 11%. Sector's growing at 6%. Momentum, fantastic. In 3 months, you're up 112%. 6 months, you're up 112%. Okay? Over 1 year, you're up 185%. Let's go analyze with AI. Remember, that one is trading at what? 12 times forward earning? Let's look at their competitor. Allstate, which is trading at 11 times. HRTG, let's go and look at this one. This one, I forget what it was trading at, but it's only 8 times. So maybe this one's getting ready for a breakout. If we go over here and we look, when did it get to a strong buy? It got to a strong buy at $14. You're trading at $25 right now. That's how you use Seeking Alpha. Now, I'll do the pitch for you because I think you should get the bundle offer. The bundle offer saves you $159. We just went over the portfolio of AlphaPix, which beats the S&P, and you're able to find things like HRTG with Seeking Alpha Premium. You save over $150. How do you get it? You go over here to my link tree, and it is the second link. Now, say you just want to try the premium. The premium is the third link. You save $30 and you get 7 days for free. And that's a fantastic, fantastic deal. Okay? And if you just want AlphaPix, you just want to sit back and say, you know what? I want them to tell me when to buy, which is on the 1st and the 15th of the month. They tell you exactly which stocks they're going to buy. And then they tell you when to sell. That's AlphaPix. I would urge you, the portfolio is far better. The bundle. So I like those. I like those a lot. Now, I had a meeting yesterday with Trendspider, okay? And I said, you know what? This Ross Cameron video, I'm having a trouble building this scanner, this momentum scanner that Ross Cameron from Warrior Trading uses, okay? He looks at stocks between $2 and $20, that less than 10 million shares outstanding. Stock has a change percentage of more than 10%, okay? 5 times relative volume compared to previous sessions. Let's log in and import. Let's subscribe to this. This will be in the newsletter. And you can see if I just want to click it open, it's going to scan for me up there. Is it going to find anything? And then you can set an alert so that if it finds something like that, it sends you a text. LFMA. Look at that one. If we go to a 5-minute chart, we can do an after hours. Is this one moving? No, not really. But it came in as a scanner. And that one, again, if you look at the long term of this one's flying. 4-hour chart. Got you in here at $1.23. But again, this is what he likes to trade. So it's a scanner that you can import into Trendspider. So I'll put it in the newsletter for you. Now, I also want to point out in Trendspider that you can see there's an RH gap, okay? RH is Restoration Hardware. On Monday, April 7th, Marjorie Taylor Greene timed the exact bottom of Restoration Hardware and bought shares. And you get this in Trendspider. We can go over here, and I'm going to go to Restoration Hardware and show you the 4-hour algorithm right here. And I'm going to put this back over to core investments because I like that up there. Restoration Hardware up there. We're in the middle of a gap fill. And yesterday it was up huge. And if you want to see, you go to what's happening now. And then you can go over here. We'll show you all this stuff. Can't really see it. But this Pelosi tracker right here, which tracks Pelosi, I'm going to get the filter out. I'm going to say equals. And we're going to say includes, let's see. It contains, and we're going to say green, and we're going to also add filter, and we're going to say symbol contains RH, and we're going to apply, and boom, I've got it right there. She bought it Monday, April 7th. So you can look at this stuff. You can look at Pelosi trades. You can look at any member of Congress that you want, but she bought it April 7th. Let's put a little dot on April 7th. Where's April 7th? Right here. Boom. Boom. Right there. Look at the bottom of that. Okay? And it's got a gap fill, and it's starting to fill the gap, 246. So you can do all of that in Trendspider. How do you get Trendspider? Well, you'll see me use the 4-hour algorithm. It's up here at the top of a link tree. Okay? And you can get it for as little as $20 for a trial. $20. You can import that screener for Ross Cameron, and you can look at the thing. You can use my 4-hour algorithm if you sign up for an annual plan. But let's go over some stocks now, because Coinbase is up 10% after being up 4% yesterday. Coinbase is getting added to the S&P. Discovery Financial is getting taken out. Okay, Coinbase. If we just go over here, I'm going to do the strategy tester, and we're going to go to the 4-hour right here. If we go over here, the 4-hour shows you it got in at 168. The 4-hour algorithm right here at the bottom, you can see over the past 24 months in Coinbase, it makes you 313% versus 325% buy and hold. Now, you don't beat buy and hold, but I would argue with a crazy stock like Coinbase that has huge volatility, it provides you some safety. 27 positions over 24 months. It currently got you in at 168. Okay, that was April 10th. That was before Kramer came out and said, hey, this is Black Monday. But again, it's joining the S&P. I think it happens on May 19th. So yeah, a few days from now, it'll join. They'll start buying it. So Discovery Financial is set to be acquired by Capital One Financial. The deal is expected to close soon. That's part of the reason why. So Coinbase is being added. Now, Uber hit an all-time high. The CEO, Hamid, if you don't follow him on X, you probably should. He's the CEO of Earnings Hub and Savvy Trader. He sold 50% of his Uber holdings. He's been a long-time bull. Okay? He gives you the reasons why. He's torn. Uber will lose autonomous robotaxi business to Tesla. 3+ years. Short term, Uber will continue to execute well and has become a cash-generating machine. He didn't get out of this. He trimmed 50%. But he's posting the problem. Uber is not doing enough to have a shot at winning against Tesla and robotaxis. I outline what I believe Uber needs to do in an open letter to the Uber CEO. In the meantime, knowing that robotaxi disruptive technology is coming and that Uber's future is fairly limited, the question becomes, when should I sell my shares? At 52-week, at all-time highs. And so he goes over this. If you want to read that, go and read it. I have not sold my Uber shares. I did trim my Uber shares previously at like 80, 82, 83, somewhere. I think it was around here in February, where it reached that 82 kind of resistance level. Now, what do I see here? Well, I see it going up there, and then I see it using that 82 as support. Support. So old resistance turns into support. Can it get out of this trading range? This weekly candle is the first weekly green weekly candle that's up above that trading range. This one, it closed at 86. Okay, it closed on October 7th. It closed at 86. We hit 88 here. So is this the move higher? Maybe. The MACD on the weekly is down there. The RSI is at 64. It still may have room to run. But the 4-hour algorithm makes you 86%. Buying and holding makes you 128%. I would argue it's a $100 stock. It's a $100 stock at some point in time this year. I just don't know when. So if you're okay buying at 87, 88, do it. If you're not, wait for a better entry. But I can't argue with Hamid's thesis right here. So if it gets below 80, I think I'm going to buy it again because I do think that that's an opportunity. Palantir, I'm not buying Palantir, but this effort just keeps getting raised. While there's some value for general tools, we continue to remind investors Palantir's value is creating outcome-focused, bespoke AI-enabled products at scale. We see Palantir as the market definer for organizations leveraging AI to drive accelerated, tangible results. Therefore, they're raising their price target from 125 to 150. This is simply an analyst justifying a higher price in a stock that just won't go down. But you can see that we talked about resistance on Uber. 121 is a resistance right now on Palantir. And its valuation is just crazy to me. I can't imagine buying this one right now. It's an F on valuation. 203 times forward earnings. Even the PEG ratio is at 6. Their growth is phenomenal, but it just doesn't make sense to me. And so I can't feel comfortable. Doesn't mean that I'm telling anybody to sell it, because if you believe in this one, this could be your $1 million stock, because I'm the guy that sold at 25. But for me, I just don't feel comfortable in it. But you make up your own mind, because there are plenty of people who think that this is an $800 stock. And Alex Karp is a great, great leader. Now, Tesla just joined the $1 trillion club. They're not at all-time highs. It was up 6% yesterday. It's up 1%. Let's go and look at the chart. Tesla in the 4-hour algorithm, it makes you 61%. Buying and holding makes you 93%. This one turned around because when you go back 2 years, the purchase price isn't as low as it was. So the 4-hour algorithm, it doesn't beat buy and hold, but it still protects you from the volatility. And it has you in at 255. You're trading at 320 right now. Again, it's a newly minted $1 trillion company. The market cap, 1.03 trillion. The PE, 166 times forward earnings. This one has to get it right. Unlike Palantir, though, this one I do think has an opportunity to actually increase their revenue significantly. Okay, the PEG ratio makes no sense. But if they get autonomy and AI right, all of a sudden, you've got a new couple $1 trillion in revenue that's coming in. So I think that's good news. And Tesla is seen as the key to integrating Chinese tech into electric vehicle sector. So now that the U.S. has signed a deal with China, Tesla may move. Now, Adam Jonas, who is the Morgan Stanley analysis, he has been a Tesla bull like Cathie Woods. I mean, he has just been a bull. So take it with a grain of salt. But I think Tesla could be one of those. I bought and held my Tesla through this downturn, and I'm happy to report I'm still holding. I haven't traded it. For me, I've made the mistake of actually not buying and hold this one. So the reality of this is I changed my thesis. I was using the 4-hour algorithm, but today I'm buying and holding. It's not a large position. We're talking a couple $1,000s. And for me, a guy who's going to die at 90 years old with $43 million, that's like buying lunch at Wendy's off the dollar menu. So it's, just take it with a grain of salt. I constantly change my thesis on some of these things. But you can't argue that Elon meeting with MBS with Trump today, something's going on. And I brought it up yesterday. NVIDIA, I think the United Arab Emirates, I think that whole Middle East that is today in oil, what's the new oil? It's AI. And what's part of AI? Buying chips. Who sells the chips and who says who can get the chips? It's the U.S. There may be a huge deal coming to sell chips to the United Arab Emirates and to that entire crew. So I do think that this one's coming. NVIDIA, I think, is the one that is undervalued. It's up 1.53%. I think this one could get back to this 130, 140 range. And I don't think it's out of the realm of possibility. Why? Because NVIDIA just has a valuation. It's an F, okay, from the quant. It doesn't like this one. And Steve Kress has gone over this before. He likes Credo. He likes other chips, okay? They have a forward PE of 27. So you're paying 27 times forward earnings. But the growth is phenomenal, 114% year over year. Now, the revenue growth, they're only expected to slow down because the revenue growth year over year is now supposed to be 59%. Remember, when your revenue is, we can look at the financials, it's in the billions of dollars. It gets harder to go up by 50%. But if we take, again, this is how you use Seeking Alpha. And somebody tells you, well, you know what? I want to see the PE, the historic PE. Let's go to valuation here. Okay, we're going to do a chart of PE because I'm going to show you it has come down. Okay, that's just 1 year. If you go to 3 year on the PE, look, you're as low as you could buy it back in 2022. The price to earnings is what makes a stock expensive or cheap. And yes, in 2023, when it was running up, it was expensive at 233 times earnings. But you're back to reasonable valuations. And so I would argue, could it go higher? Yes. But I will also tell you, the market cap is $3 trillion. And so doubling this stock to a $6 trillion company, it would take enormous revenues to do that. And so I don't think it's likely to happen, but it's one of the safer plays in my mind because NVIDIA has that kind of hold on the chip sector. Now, Amazon, they rallied after the U.S. backs off high tariffs from China. I think this one is a crazy, crazy good buy. When you look at Amazon and you go over here and look at the valuation, it seems high at 33 times forward earnings, but their growth is still phenomenal. The sector's growing at 2%. They're growing revenue year over year at 10%. That's crazy good. Now they're spending a lot of money, and that's why their levered free cash flow is actually going down. They're spending a ton of money. But if you've ever watched one of these damn robot factories, warehouses, it's amazing. And I think they give tours of it. I've got to try and find a tour of it. But I think this one is a great buy. So does Wall Street. Wall Street thinks it's worth $237. The problem is it's only 13% upside. I think there are far better opportunities out there than Amazon right now. But at 188, why weren't you buying? At 181, where the algorithm told you get in. The 4-hour algorithm wins 54% of the time. Yes, it doesn't beat buy and hold. But down here, where it was under the 200-day, just seemed like a screaming buy. If you didn't Maybe you just bought QQQ. Hopefully you bought something. But that's what risk tolerance teaches you, is that at times you've got to feel uncomfortable buying things. Now, one that I wouldn't necessarily go balls deep into, you can stick the tip into if it dips under $700, is Eli Lilly. Drug makers rebound after White House eases fears over Trump's pricing order. They basically clarified, hey, we're not coming after everybody. We're just trying to reduce some of the cost. And so when you look at a 5-minute chart yesterday, and we're going to turn on a little after hours here. Look at the 5-minute chart. So when you started the day, you tanked down from 739 all the way down to 724. You closed the day at 756. They rebounded as news hit. Okay? The 4-hour algorithm on this one makes you 56%. It got you out up here at 9%. Doesn't have you in yet. But there's a nice gap up here. Okay? A gap between 849 and 891. I think you fill the gap at some point. Make sure you have a plan, and maybe it's the 4-hour algorithm because you win 50% of the time. So when the 4-hour algorithm gets you in, get in. If this is one that you want to add to your portfolio, get in. Your average win is 8.22%. Your average loss is 3%. So make a stop loss at 3%. And then buy back in when it tells you to get back in. You can trade this one. Just make sure you have a plan. Because weight loss drugs may be targeted as Trump vows to cut drug prices. That's the problem. What he wants to do is cut Medicare's costs. He doesn't want to do it through Congress. He doesn't want to cut actual Medicare. What he wants to do is cut what they're paying for drugs. And so that he can get his big bill through. That's the goal of the administration, is to avoid congressional, hey, we have to cut this because we have to get our balanced budget in. So it's a plan. I don't disagree with it. I think it's a good one. I just think, again, with the Trump administration, some of these things are just crazy, crazy implementation. And so expect some volatility. Now, has anybody forgotten about Bitcoin? Because Bitcoin has taken off. I bet Bitcoin might be entering parabolic phase. This is an analysis. I mean, we can just go and look at BTC versus US dollar. Where is it? 103. I predicted at the beginning of the year, we will hit 150,000. I think we do. IBIT is the way I'm playing it. And if you want a chart, just go and look at a chart of IBIT. And there's tons of ETFs. Don't take me. But again, I bought on the way down here. And so I bought at 47. And I'm up 23% since then. It's not a bad play. 4-hour algorithm doesn't work. I mean, again, this is only a 16-month-old ETF. It makes you 29%. You only win 33% of the time. But I take this as a good entry and I start buying. Even though it's going down, I start buying. When you take a look at a weekly chart of IBIT, we just got our 50-day. That is at 45. That would be where I'm so comfortable buying. Am I comfortable buying up here 57? No. But the 4-hour algorithm doesn't have me in at 57. It has me in at 47. So again, make a plan and buy it, because what are Bitcoin experts telling us? They are telling us they can't produce Bitcoin as fast as the overwhelming demand for miners. That's what the Coinbase, the Coinbase executive said. Exchanges are running out of supply. It's a simple supply and demand issue. And yes, a MicroStrategy might be a Ponzi scheme, MSTR. It's a legal Ponzi scheme. He's just buying it all up, and he's got the billions of dollars to do it. So if you want to trade something in the 4-hour algorithm that backtests really well, it's MicroStrategy. And again, if you just take this and say, well, I got in here at 296, in 31 days, you are up 37% on that buy. The 4-hour algorithm makes you 1,990% over the last 2 years. Buying and holding MicroStrategy, if you can do it, makes you 1,221%. Your average win on MicroStrategy is 70%. So is this one done? I don't think so. It could double from here because you could go up another 37% and double that return. Again, it's a simple supply and demand. This one, Bitcoin might be entering parabolic phase. Go and read the actual article and then watch this video. Makes sense. Makes sense. Now, I do want to point out, I've been seeing We Ride all over socials for some reason. And I will tell you, I looked at it yesterday and I said, well, let me look at the 1 hour stock battle strategy. Because the 1 hour stock battle strategy I developed, it is a 1 hour candle. So it's nice and easy to just get an alert on these things. And yes, you do get alerts, but see how many times it wins? This one on We Ride, which I saw, which is a hugely volatile stock, 19 positions over the last 61 days. 61 days. So 2 months. And you've traded 19 times. You win 63% of the time. You make 14% versus losing 40% if you bought and held. The 1 hour stock strategy is a proven winner on some stocks. Back test it. Okay, it's a great strategy to play. And I will tell you also, one of the most favored ones that we've had in the past, GCT. GCT, if you go over to the 4 hour algorithm, it makes you 100% versus 210% if you bought and held for 24 months. GCT, it got you in here at 13. Where are you trading right now? 17. It's been up huge, gapped up on earnings. Where are we going? Well, previous support and resistance is at 18 and 25. You may be going back up to those levels because, again, maybe it just went too low. Just understand, hugely volatile stock, low market cap. Now, let me address a mistake that I made in the core portfolio. If you want to follow the core portfolio, again, everything's over at Linktree. You got Trendspider, you got Seeking Alpha, you got Alpha Picks. You have my free newsletter, okay? dailystockpick.substack.com. You can subscribe. It is free. It is like Cliff Notes. For all you old folks out there, it's like Cliff Notes for the podcast. You can join Webull. Get up to 20 free stocks. I actually joined Webull and I put $1,000 in there. And let's see, we'll check it live on air right now. Where am I? $11,500. That's where I've traded. So again, I have it as my, I talked to about FIRE yesterday. I have a big Fidelity account, which I will die with $43 million in the bank. And I have my Webull, which I put $1,000 in. I feel way more comfortable taking risks in my Webull account because if that $11,000 goes to zero, I think during the Liberation Day, it got down to 8,000. If it goes to zero, my life doesn't change. Again, that's like buying off the dollar menu at McDonald's for me. So that's why I opened up a Webull account. So if you go over here, even I had some people sign up for Visible Service. You get $20 off your first month of Visible. I love Visible Service. That's what I have. But they're way down here, there's a Savvy Trader. Follow my trades, okay? This is my Savvy Trader core portfolio. And many of this total return is huge. Costco, 94% return. Meta, 127% return. Goldman Sachs, 79% return. Eli Lilly, 38% return. VOO, 32%. Microsoft, 32%. Palantir, 584% return. Okay, NVIDIA, 188% return. Uber, 106% return. So there's a lot of stocks with big returns in here. It is not a managed portfolio. It is simply 34 names that I think you can buy and hold. But I made a big mistake in this. Okay? I made a rather large mistake. And it's down, 44%. That's $26,000 lost on this. Because the portfolio is managed where it is just 100 shares that I buy when I enter it. Now, when did I buy it? I bought it on April 11th. And United Healthcare is crashing again. Why? Their CEO steps down and they suspended guidance. Is this an opportunity? Because any reaction is an overreaction? I don't think so. There are fundamental issues with United Healthcare. And so when they reported earnings, they gapped down. There are fundamental issues with this stock. I made a huge mistake. UNH, it's been a fall from grace. I took it out in December. You know, United Healthcare, you can look at the whole history when you go to Savvy Trader. Let's see. Where is it? Right there. So you can go to, we can view more history on this one. View more history. I added this one. I'm going to look at when, I think it was during the initial time in June 2023. Yeah, it won't let me. I sold it on December 17th. And then I purchased it again. And again, I'm down on this one. But it's not one that I regret buying, because I did think that they were in a rebound, because I sold it during the Luigi fiasco. When the CEO, when their co-CEO or something got shot. So I'm going to take it out. It's just not worth, we're going to sell it. And we're going to I'll sell it later in this one, but I'll put in the reason. You can follow this one for free. Just go to Savvy Trader. Again, it's 34 positions. And if you wonder about the performance of this, even with that $24,000 loss, look at it. The maximum time. So since its inception, the core portfolio has made 47%. S&P 33%. So it's a really, really good portfolio. There's only a couple of losses in there. Only a couple. I mean, Cleveland Cliffs 53%, but that's not a large loss. Pepsi down 23%, 29%, and UNH. That one was, UNH was a mistake. And again, if you want to read more about UNH, you can. Now the trading desk. So let's point this one out. Trading desk continues 7 straight sessions of gains. I had pointed this one out as a potential gap fill from their previous earnings. Okay, after this earnings, I said you may want to look at this one, because I don't think it's going to go back to fill the gap at 59. I think it's coming to fill the gap between 85 and 120. And what do you have? A march upward. They had a good quarter. This was an anomaly. Okay, it's expensive. Make no mistake, it is expensive. And the quant still has it as a strong sell. It's been a strong sell. I have an alert for this one for when it changes from strong sell. I may have to buy this one before the actual quant changes, because the only reason the quant changed, if we look at this one, why is it a strong sell? Let's look at this one. It says the company has 3-month performance of minus 42%, while the communications sector median is 0.8. Again, it has characteristics, but the rebound may be happening. Is it expensive? Yes, it is expensive. When you go over here and you look at the valuation, it's 45 times forward earnings, but their PEG ratio is 1.45. That's not horrible, because their growth is, again, 25% year over year. So I like this one. You can analyze it with AI. I do like this one. It's a little bit hot right now, but if you bought on the 4-hour algorithm, over 33 days, you're up 65%. You win 58% of the time. Your average win is 10%. Okay, I do think that this one comes back up to start fill this gap. I've got an alert. If it hits 85, I like this entry into this gap to fill. So there's a little bit for you. Again, Webull is up there. Now, social requests. Typically on Spotify, I will reply to most comments on Spotify, but because I get so many comments on so many social networks, I just usually respond to them, because this would be a 4-hour show if I actually continued to respond to everybody. But John asked me a good question. He said, I need to help understanding buy the dips. Let's say someone bought and held Meta, and we'll just take Meta since 2023, and the average price of 90. They only had a couple $100 to spend. But then today they've got 5,000 to invest. If they go and buy Meta, their average price goes up. So if a big dip happens, then their green stock is now red. although they have a larger positions. Can you talk around the concept? Yes. And this is where managing your portfolio is part of your own due diligence, okay? Meta, for instance, you said 2023. If you bought it down here at 118 and you had only a couple $100 and then you put 5,000 in here at 680, yeah, that would be an issue. Why weren't you buying during this time? If you've saved up $5,000, again, you add to your winners. But when you look at Meta during this time and you go over here to Seeking Alpha and you say, okay, let me look at the metrics. Let me look at the price of the stock, not just the stock price, but the valuation. And that's the key, because as the price goes up, maybe it actually becomes cheaper. Okay, let's look at a 5-year one, because we're going back to 2023. Where was the PE? It was 11. Okay, where are you now? You're at 24. And back here in July 2023, let's look at July 2023. Where was it? It was in the $250 range. You're actually buying it cheaper today at $600 because their earnings are greater. And so that's the way you look at this. That's the way I look at it. When I'm adding to my winners, it's why I don't want to add to why I don't want to buy Palantir. It's why I don't want to pay, Apple. Apple's a great example. Apple PE, let's look at the metrics. Let's just take out price return and let's go to valuation. Let's go to PE. Okay? The PE on Apple, it's lower than it has been in the last year. If you were buying Apple in December of 2024 at $260 when I was selling, you were buying at 42 times forward earnings. Okay? If you're buying Apple in April this year, you're buying at about 28. Right now, you're buying at about 32. 32 times earnings. Is that good? Well, look at the 5-year. You go back to the last time it traded around 32, 2020. Let's look at Apple in 2020. So if you're going to add to positions, understand that adding 5,000 in there is not always a great bet. But if you go back to, let's see, that was 2020. Where was it trading in August of 2020? It was trading right here at about 109. And that was the last time it traded at 30 times earnings. Today, you're paying the same price as you were back then because the earnings grew. So, John, it's not always about, hey, the dollar amount that I put in, it might be a loss. What's the value of the stock? Warren Buffett has billions of dollars in Occidental Petroleum at $70. Has he bought on the way down since? I don't think so. Let's see. Let's see if he's bought since then. We'll just go to insider sales here. Down at the bottom. The last time he bought, February at 46. He bought here in August at 35. I'm sorry, he sold at 35. They sold a bunch at 35. So, again, he's bought all the way up and down. It's not about buying the dip with the stock price. It's more about, hey, if I buy it here, what are you comfortable with? AlphaPix is a great example. AlphaPix portfolio, when it hits 10% of the actual total portfolio, they trim it. So it's not just about buying the dip. It's about managing your portfolio. You're asking about buying the dip. When you buy the dip, if a stock hits $60, but their earnings are actually coming down and it comes down to 40, it may be more expensive to buy at a 40 than it was at 60. That's where you need to know what you're buying, okay? Look at GE. GE is a great example, okay? GE, when we go to a monthly chart of GE, their earnings were doing great during this time, way back in 1985 and 1990. But then you come in and you look and GE's down. Now, I can't look at this because this company is way different than it was in 2000 today. It's just a totally different company. And any metric that I look at would be skewed. I just don't have the tools to look at it. But, you bought up here at 258 and it was doing great on earnings. Well, as the company lost money, You were actually paying more for it at 42 than you were at 248. So it's about knowing what you're buying. Cisco, another great example. They had total inventory problems back in the dot bomb. They were projecting that they were going to, continue to sell. They made too much inventory and it went from 60 and you're still not up to where you were trading here in 70 in June 2000. You're trading at 61, 25 years later. So again, it's not about buying the dip just because it went to 60. Palantir's a great example. Palantir's actually gotten cheaper, I think, over with the multiple. Let's look at their PE because it's crazy, but it might have become more expensive. Let's look at their valuation. So buying the dip is not just, hey, I'm going to buy the price, but I'm going to pay for the stock. And yes, look, it's gotten more expensive. So you can see the 3-year, it's almost up at its high. But at let's see, February 2025, it was at 627. Let's look at Palantir in February of this year. Where was it? February of this year, it was at its all-time high. So again, it's not just buying the dip on the price. It's buying a growth stock, which is going to grow into that valuation. And that's what people are doing with Palantir. So buying the dip doesn't just mean the price. Now, if you're buying an index, like QQQ, the way I look at QQQ and the way I look at VOO and things like that, projected revenue of the companies that are in that index. And you can Google that and use it. But if I know that here in February, it went up to 540, I'm buying this whole way down. I'm just figuring out a strategy that works. And the 4-hour algorithm works. So I was adding at 478. I was adding at 456. I was adding at 453. I added at 458. I bought the dip. So it's not just, hey, I'm going to buy $500 here, and then 3 years later, I'm going to buy $5,000. It's managing that position in your portfolio. And that's what Alpha Picks taught me. That's what hedge funds and others have taught me. You can always load your portfolio into an AI and say, what changes would you make? You can do that. I just like managing my position. So with that, I'm out of here. 53 minutes. It was a long rant on that one. John, hopefully that helped you a little bit. Understand that. If you have any questions, hit me up. Everything's on Linktree. Even my email address. You can respond to the newsletter. Everything is on there. If you want Trendspider, you can sign up for that. If you want Seeking Alpha, you can sign up for that. The bundle is the best opportunity out there. Seeking Alpha is one of my top tools. Trendspider is my other top tool. I can't live without them. So if you have any questions, hit me up. Okay, see you. Bye. Chris, I think I have 6 pairs of sneakers. And the only reason I have 6 pairs of sneakers is because when I run, the cushioning needs 3 days to recover. So I learned that from an Olympic runner who said you're never going to recover if you run every day unless you have multiple shoes. So that's my claim to fame. Okay, let me pull this down, push that up, and then we're going to go here, and I'm going to break, and we're going to cut that out, and then we're going to put in, oh, you know what, we'll put in this one at the beginning, green screen, and then we'll put in this one right there, green screen, boom, 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 and then we'll put in this one right there, green screen, copy, and I've got to go because I don't know if Cole wants me on this phone call or not. Export file. Next. What the hell is that? 13 pod. Do. Ashcat. I hold Google. I did sell Google at about 158. I mean, are you using Google search as much as you were? I mean, Chris Camillo, yeah, he made the case that Google is not, he's not using it as much. I'm not using it as much. That's why I trimmed my position. I sold a bunch in my retirement account. So, yeah, QQM is better for your expense ratio. That's it. I mean, QQQM, QQQ, and then we'll look at peers. And I think QQQM is in there. No, we're just going to edit. And I'm going to take everything else out. QQQM. It's the same exact ETF, just a lower expense. And you can see it's 0.2 versus 0.15. That's it. It's a little more liquid because it's got 318 billion in QQQ. So filling an order on QQQM might be a little bit tougher for your brokerage firm. But other than that, it's literally the same kind, the same exact stock. QQQM has a slightly larger dividend yield just because, I mean, it's just not comparable. I mean, it's minuscule, the percentage, but you can see 12.57 versus 12.56, 3.23, 3 month versus 3.18. I mean, it's literally the same exact thing, just the market treats it differently because it's a different stock. So your buying and selling is never going to be perfect because market conditions. And you can see QQQM has 106 versus 102 holdings, but it's literally the same exact thing. Literally, I mean, I own both QQQ and QQQM. I always forget to buy QQQM, but in my buy and hold, like my health savings account has QQQM in it because I don't trade that one. That just sits there. And my health savings account, just in case anybody knows, health savings account, I'm planning on just buying and holding that. I don't spend the money because there's no statute of limitations for when you need to claim that money. So I put in like, God, $5,000 a couple of years in a row. And today it's worth like 50, 60,000 just on the growth. And so, you know, later in life, as I gain more, as I need money, I can always take it out of there tax-free because I have a receipt for like my wisdom teeth, for my doctor's office visits, for my medications. I just have receipts. And so that year that I take money out, you know, say I need $10, I can take $10 out of the HSA and just turn in, you know, hey, I spent $10 on this thing, but I don't need the money. And as long as it stays in there, it grows tax-free. So as long as I have some receipts of healthcare spending, I can take it out. So it's just a tax thing. But that's where I have QQQM because I don't trade in there at all. I don't trade my healthcare savings account at all. I just buy indexes because I want it safe. I just want it to continue to grow, and I don't want to worry about the stocks and look at that stuff. It's not maximized. It is just buy and hold. But it's a smaller account. I mean, it's $50,000. Again, if I'm gonna die with $43 million in the bank, $50,000 is, I mean, it's a pair of shoes. So, but it's literally the same thing. It's the same company. You can go and ask Perplexity, why does QQQM exist? And it'll go and find out. You know, it'll summarize it for you. It's a good. Again, there's nothing. I mean, it's just literally nothing. That's the way I look at it. So I'm gonna go do a. I think I've answered everybody. Bob I didn't have the balls to buy the dip on Palantir either. And I don't have the balls to buy it now. I'm the guy who sold at 25 and I haven't gotten back in. I mean, I literally haven't gotten back in, so I think I said hello to everybody. We got 40 people. We got 40 people in here and 24 thumbs up. Do me a favor, just hit the thumbs up button. Can't believe that. Okay, let's look at YouTube thumbnail. I do have to go though. Let me look at my Webull account before I go. Do I have? Oh God, why is Wolf? Oh, okay. He sent a message about that. I was like, why is Wolf messaging me? Oh, look at this. Now I'm getting offers on Twitter. Let's see. Webull is, ooh, took off 11.5. Thank you, Carrie. But hit the thumbs up button on the actual thing. I appreciate you hitting the thumbs up, though. I appreciate you. It helps. I mean, literally, I only have like 3,500 subscribers. No, not even 3,300 subscribers. So if you like the show, share it. Let me see. And I'm supposed to get, I'm looking at my Fidelity account now. Whoo! I'm underperforming, but why is that? Is that Apple? It's usually Apple. Yeah, Apple's down. That's why I'm underperforming. Amazon's up another 2% though. Now I've got to check this one because I have not gotten some payments that I'm due. Let's see. Okay. Year to date, we'll go over this. Year to date in my brokerage account, my brokerage account year to date, I'm down 8%. So, that's huge. It's because of Apple. In my IRA year to date, I am down 10%. I do have a large cash position. I sold a bunch in that one. But it's mainly run by Apple again. In my Roth, I am year to date down 7%. So I'm not positive this year by any means. And in my healthcare savings account, I'm down 0.19. That's just literally QQQM and VOO. So that's the best performing out of the bunch. Okay, with that, I'm out of here because I don't know if I have a phone call at 10 o'clock or not. I will see you guys later. Have fun. Bye-bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. and fears.